What's up? What's up? Adeliki and Isaac. You guys are in here quick. Damn, Discord fucking popping too. Everybody's up for PMI. I haven't looked to trade anything yet this morning. Although I will say we talked about gold yesterday. I'll discuss these two trades I did take. I think we discussed one, but yeah, that shit's going for the highs. Right off the level we talked about though. We talked about this level right here, and then what was left of this fair value gap, and why this order block was important. Now we'll go over that later. Um, Hold on one second. Pull this up. You guys see? Look, we talked about. I even put on Twitter for you guys. Long ideas around trading the closest imbalance above, watching price action as we return to the OB. Now we return to the OB. Obviously, I didn't catch anything. I won't say I caught anything. Hold on. Why did my shit just close? Okay, there we go. That was weird. Like all my windows just closed. Sorry about that. But holy shit, it's moving. What were the PMI numbers? Let's see. I'm getting alerts on my phone. I'll pull it up for you guys as well. See, I'm not really one to trade before the news, but I will trade sometimes if I'm watching. Like last week, I traded before FOMC, which I usually don't do, but it worked out nice. I didn't take anything this morning. Let's see what we got. Why is it not? It's not up yet on here. Okay. Well, they're worse than expected by quite a bit. So, and another thing is that they're not only worse than expected, they're worse than previous and expected. Um, let's see what the indices are doing. Again, I'm not really going to force anything today. Like, I could be totally fine without taking a trade today. Gold has me kind of sad, though, I will say. Because a part of me wanted to set limits. I will say, too, on gold, a lot of times, if you find a level you really like, setting limits is not a bad idea. I've noticed that while I've been trading it. Yesterday, this trade I took that was really lackluster, super boring, but ended up hitting full TP during the Asian session. The logic behind it was we came under this low right here. Then we got this break of structure to the upside in the 5-minute with displacement, and we had this nice fair value gap. I think I refined it to like a 3-minute or something, but it was originally this right here. And I just set a limit right at the top of it. Risk reward is almost 2, so that's fine with me on gold, but I don't like them taking this long when my risk reward is that low. But it did hit. Now the key I will say that I've learned from trading gold recently is take profits at the next liquidity objective relative to the time frame that you entered on. Meaning that if I use a 5-minute fair value gap, I'm using the next area, clear area of liquidity on a 5-minute. So when I come down here, yes, there's liquidity at this high. I'm not going to target that. That's not where the buy stops are. The buy stops are up here. And if your analysis is bullish overall, which we talked about yesterday on gold, that we would most likely see a relief after we took out this old low, right? Where is it? Or no, it wasn't old low, it was a fair value gap. Sorry. If we filled all these imbalances, it was, damn, it's fucking moving. Wow, big sad. Should have set a limit. But we talked about after we filled that daily imbalance, that price was likely to move to the upside, and that's exactly what we did. So once we have that bias, you can build a framework around that, so to speak, and you don't have to take a trade all the way up to where you think it's going, but just know that you're in a bullish direction and try to catch a wave, but don't try to ride the wave after it's done. or you end up getting, stopped out. Like for instance, let's just say you got an either trade that I got in yesterday. So I got in a trade over here. You can't really see it, it was so fast, but that one hit full TP, and so did this one. No partials, just full TPs only. So, and that's another key thing is don't try to take partials a lot on gold. Just take the damn trade. Take it all. Because that shit would be so volatile, right? Like, so let's just say you got either of these entries and you wanted to, um, hold it to the moon. Well, guess what? You got stopped out both times instead of just taking that 2R, 1.75R, which this is something that's really up to you guys and how you trade. If you're okay with that, I've been back testing a lot, and I know it has a super high win rate, so I don't care to have 2R. I'm not here to try to sell you on a dream that every trade's going to be 25R. That's not me. I'm just here to make money. But what I am going to watch here on gold is how these 1 hour candles close. Also, depending on where this impulse move stops. Ideally, it would be great if we would leave these, but I think it's going for this high. That's where that would be a very nice liquidity objective if we could leave these equal highs, create these fair value gaps, and then look probably somewhere. Really, this is where I would say the order block starts. That's where the sell side began to be offered, right? The inefficiency between supply and demand pushed price down, taking out these lows. So smart money was liquidating traders in order to obtain the liquidity to go long. Classic manipulation. Also, if you guys want a little bit of power of three, if we're looking here, if you take a 1 hour go on the 1 hour, we'll find the New York midnight open. We'll just draw a line out from that. So what we're looking for is some form. If we're bullish, right? If we think that the candle is going to close higher, we go on like a different time frame. Yeah, if we're looking for the candle to go higher, then oftentimes we're going to have a wick down. So for instance, let's look on most bullish days. Not all, but most, right? We have a big wick down, a big wick down. Now, what are those wicks doing? They're absorbing sell side liquidity. Basically, it's like they're hitting the gas station before they go up. So they're coming down, taking out all the sell stops, all of the early longs, and inducing the shorts in order for market makers to have enough liquidity available in order to push price up. So when you're thinking out a candle structure, and you're thinking about the day, like today's price action, well, obviously, if you're bullish, you want to get in at the wick. So we're going to look what happens after New York midnight. I'll go back to that. I'll go 3 minute. So what you're going to look for is a violent liquidity raid in the opposite direction of your bias. So if we're looking to go long, we're going to look for raids of lows into an old price delivery array under an old low, which is what happened is textbook. So once you see it, and also it happens a lot of time during kill zone. We notice it happened during the New York kill zone. Gold moves very well during the New York kill zone. I wasn't watching this, so I didn't participate. I can't even say I would have participated because it's before PMI. But we came in right off that order block. This kind of cements to me that the institutional order flow at this time is bullish. That can change, but at this time, I'm looking at the institutional structure here as bullish because we're going under old lows into old institutional levels and reacting impulsively off of them. Also, it seems like we're wanting to preserve liquidity above. Now, what I'm going to do is I'm going to take, here, I'll delete this just so you guys have that. I just wanted you to have that little lesson, I guess. I'm going to, actually, I'll do this, make it easier. I'm going to set an alert on the body of that candle, see if it lines up with the 1 hour body. Yes, it does. So I'm going to set an alert there. I like that as an order block because and this is where when you're selecting an order block, you don't want to just look at every, I hate trading view, man. When you're looking at order blocks, in my opinion, when you the way they teach it and the way that it's easier to teach is that it's the last down candle before every up move. Now, that would be more of a supply or a demand zone. But the way I'm looking at an order block, a true order block, because the logic behind an order block is that we witness one side of liquidity being offered in order to introduce an efficient uh, breeding ground, if you will, for institutional orders. So if if we're looking at it in that perspective, we need the order block to do what? We need it to raid liquidity. We also need them to happen during kill zones. So we look yesterday. Look what time this order block happened. At 8:30 a.m. New York kill zone. What time did we hit into this morning? 8:30 a.m. So this is where you can really get more confidence that there is a force at play here. Now it's gold. We all know. Anyone who knows gold knows it's like one of the most manipulated assets you can trade other than oil. Now, gold, I mean, JP Morgan's even gotten fined for manipulating gold in all metals. So, you could look at that as a reason not to trade it, which I've done in the past, or you could look at it as a reason to understand it, because once you can understand the manipulation, you can benefit heavily off of it. There's a little case study on gold. Um, what I want to watch is that order block, and that it's going to probably be a 1 hour fair value gap, and watch how price reacts to that area, and if it gives me bullish structure on a 5 minute, really probably even a 1 minute to be dead honest, with enough displacement, I'll get in longs and target these equal highs if they're preserved. I could see these still getting taken. Just we'll see. That's gold. S&P moving weird. I mean, not really seeing anything. Yesterday was weird too. It took out, where was it? Took out like a short-term low. I think it was the Nasdaq. This didn't take out any lows. Yesterday was weird. Just straight dump. If anything, to me, this is where the buy side would be, but we also did kind of react pretty nice to this fair value gap in this order block over here. I'm probably going to just sit on my hands with S&P for now. I wasn't really expecting to rush in anything on indices unless I really get what I want. Now this looked a little better, I will say that. We came up, even took those highs. There's still quite a bit of highs up here, but ideally I would like a little 3 drive here above this level in the 1 minute, and maybe take a sell. What's Bitcoin doing? Moving pretty nice. Nothing crazy. Still hasn't came to where I want it, so I'm not really messing with it. Oh yeah, CHC, let's go over this. We got break even this morning on CHC. I didn't take any profits, so it was total break even for me. But the overall bias, and the reason I set it for break even is because I was going to sleep last night after we entered, and I don't like sleeping on stuff without being de-risked. I'll either just close it or break even stops most of the time. The other night I didn't do that. The GJN got stopped out, so wasn't going to make the same mistake twice. The bias for this was, we talked about this on stream. The original POI was this candle right there, that or up candle. We saw price move pretty harshly into it and it moved far past the mean threshold. So that tells me that that liquidity was not what price was drawing to. Price was, and then we have these relatively equal highs. We posted about this in the Discord, said, let me see exactly what it said actually. Seems like CHC may want the liquidity above these highs. We'll revisit tomorrow morning on stream, but not forcing anything. So there's the picture before. And we see after it definitely did want those highs. So we waited till the liquidity rate was present, and once that high got pipped, we saw a pretty violent reaction. Barely got above it, and then saw a break of structure with displacement. That candle right there, tiny fair value gap right there. So what I did was I waited for the 1 minute to break down. And this is a little skewed because I opened the trade in the 15-minute. The position size will be weird. I entered it right around like here. And the reason for that is, I wanted to kind of confirm that zone. Looking back, the only thing I would have done differently is played the. I don't really like trading alts with like super tight stops, but I could have traded the 1 minute entry, which the 1 minute entry would have looked something like this. It would have been much better risk to reward. Would have hit around like 4 or 5 R. So that's the only thing that I can reflect and look back on. I mean, it's a break even trade, so no harm done, but could have been a bigger winner had I used that stop loss. But again, I'm not. This is the first time I've traded CHC since like the bull run, so using super finite um, strategies that I use on larger cap assets didn't sit right with me. But we could get a market maker sell model, to be honest, like with 1 to 2 more consolidations up above, like maybe one more, and then start to see a redistribution. But what's in the daily chart? I mean, if the only thing that I see that it could be drawing to really is, I mean, this high maybe, but it's like, again, it's this chart's not super clear, so to speak, on what price to be drawing to. I mean, the only highs I see are this high and this high. That's it. It's literally it. There's no imbalances here, nothing. Weekly chart looks like it wants, I mean, really all the way up here, to be honest. If this candle closes like this, which I don't know if, well, we got 5 days. If it closes anything like this, I would look for CHG to come take this high. And it might take a while. You might have downside first, but that would tell me that price is drawing to that area. So I said USD JPY is dumping. Wow.
Yeah, I missed my USD JPY trade.
Yeah, shit's moving.
That's strong displacement right there.
Yeah, can't
On
above
the
these equal
4 hour,
highs.
it's getting torn out.
Seems
I
like
was expecting it to go further up higher to 137, take out the highs above that, but it never got there. I might
yeah.
short it when it comes back right now.
I haven't been watching USD JPY too much. I don't really, I go back and forth with like what pairs I trade in Forex. Like I'm like super picky. If it's like very fucking clear and clean, I'll play it. But
I usually I do the opposite. I play everything. I just wait for a higher time frame setup though.
right.
I've been catching like 200 to 300 pips per pair because it's all about market structure and macros. So it's pretty simple to trade.
Yeah.
Like you can catch a nice trade on all JPY pairs right now. Whatever if you like risking a lot, you'll probably do GBP JPY because it has the highest spread. But whatever fits your fancy, you could trade it. I just trade chart setups.
GBP or USD looks fucking good.
Yep.
This shit looks good. This is what we talked about yesterday. We took out that low. Nice reaction off of it. A little 3 drive on the 1 hour. So I want to see really how we. Let's see this actually. Like to see how we close this 1 hour, but again, it's kind of out of the time I
Jeez.
trade Forex. But
Bro, USD JPY is dying, bro. From the time you looked at it to right now, it dropped an additional like
holy shit,
percent.
looks like
Like,
Bitcoin chart.
yeah, I don't know.
Euro USD is probably doing that thing too. Yep, that's exactly what we're talking about. So This is why I said, and now I wasn't really watching these, so I'm not gonna take credit for taking a trade. But I told everybody yesterday on the Twitter, and on the stream. I said on the Twitter, I sound like a boomer. But after we clear these highs, watch for a move away from them. Right, moved right off those lows, or I said highs, but you guys know what I meant. Also USD. This is gonna be a clean one too. If US, what's DXY doing? Mm, that's fun. I don't know why it won't let me put it there. Oops. We're drawing. We're gonna end up taking that, but maybe not right now. Like we have a lot of retracement that's possible. If anything, to be honest, I like this level right here for DXY at some point, but I'm not really um, entertaining that now. We're a little bit away, but I do like that order block. Overall, though, we've been talking about these 109.77 to 110.26 for a while now. Um, Again, DXY came down. It came off that daily imbalance. We took liquidity once with this order block right here, so that's a nice level. Um, Now we've expanded. Seems like price. This is just too weird for me. Okay, look, almost exact equal highs, and right below that fair value gap. Also, with the PMI numbers coming out lower than expected. Um, that's, I don't know, weird. So I would say might see a little relief on USD pairs though. I'm actually curious. I want to look at. We've talked about this a little bit before. Let me first look at 5-year notes. Or no, I'll do 30-year. I can't remember the ticker. It's like, yeah, Z, this one. Wrong one. If you guys are wondering, this is the 30-year T bonds. Just curious what they're looking like. So I want to see if everything. Oops. Everything is correlating. So they failed to make a lower low here. Well, DXY made a lower low. So that's all. Everything checks out there, but it's very close, I will say. Let's look at 10-year notes, making a higher low. Now, if we see the 5-year notes making a lower low with can't remember this one. This is the one I think that's weird. Also, I see some questions popping up. Give me 1 second. I will answer them. I just want to stay focused. What is the I think I actually might have 5 years on here. I have 10-year. I know that's the 5-year one that's weird because I don't look at these super often. I'm just curious right now. Here it is right there. That's what it was. So yeah, it's like 5 US note instead of okay, so that is okay. This is what you can use SMT divergence on the bonds market and with dollar strength index to determine when you may see. Basically what you're seeing is large money is at play preparing for the expected interest rate hike. So what we can assume, since we're seeing, our benchmark asset making a lower low, and then our asset, which we're looking at, trying to determine if it's being accumulated, which is dollar strength index, we're seeing that light divergence. It's not this at the same exact time, and we're also failing to make a higher high when this is occurring. So when we're looking at that, think of the 5-year note as your benchmark or your key benchmark for short-term speculation of interest rates. I think that we all know that I think they said straight up that they're gonna uh, they're expecting another 0.5% hike in September. Now, if you see extreme divergence, what we're looking for is we're trying to identify signs or evidence that the dollar is either being accumulated or distributed. So in this example right here, the dollar is being accumulated. So the dollar is being accumulated. Usually that's in anticipation of a um, either a rise in interest rates or maybe a higher than expected rise. I don't think that they will do it like that, but just keep that in mind. Also, it seems like we're going to push down a little bit, and then we're kind of going to be drawn up to these highs. So, that would go into the bias that we've had for DXY for some time now, ever since we've been down this imbalance since the beginning of the month, that we need to come up into this weekly fair value gap. That would be chaotic to say the least if we came down and then start to come up. That's probably what I would see happening, and then from there, you might see some relief, you might not, but that's kind of the narrative I'm seeing play out right now. So now I want to answer some of these. So he said EOS. Dude, everybody is asking about EOS recently. It's like the most asked about coin. I'm not playing. I guess because it's moving, but okay. So you came up and bounced right off that imbalance. Now you see that we are reacting visually on the daily chart. We've also got a very nice order block right here, where if you want uh, order flow to remain bullish, you want a push down into this level with force, but then you also want the lower time frames to give you bullish structure there with displacement. But at this moment, I see it like, okay, we filled this imbalance. I think we talked about this imbalance before. We might haven't. I can't remember. But we filled the imbalance. And now we haven't closed this daily candle, so I'm not going to really look at this. Right, depending on how you close this daily candle, you might have a nice little draw on liquidity right at the fill because it's at an equilibrium of that little impulsive move we just made up in order to rebalance. But we need to wait for price to reprice itself and see what we're going to do. But this daily candle is going to mean a lot. Ideally for bulls, you want to close decent. You don't want to fill this gap without this daily candle closing. So potentially could see or could have seen probably already a short opportunity, and here it was. So just for future reference, when you guys are watching this, if we're looking at price after it fills an imbalance, or if it's in an imbalance, maybe you use mitigate or an equilibrium for your mitigation. Maybe you need it all the way filled. Maybe you need it just to be in the whatever you use. You wait till price action is checked off that box of what you require in order to even have an eye for a trade, and then you wait for that displacement shift in market structure, which we got very clean right there. And notice it doesn't have, this isn't your internal low, because your internal low would be down in here. So would your swing low. We're not looking at that. We're just looking at any high and low. So once price is taken, or once the lows are taken, we look for the impulsive move that caused it, and we look for the first price delivery array in a premium for sells. And then you can frame a trade around something like that. You could put your stop loss all the way up here if you want to. Now I wouldn't have done that in this example. You can also set your stop loss above the impulse swing. Now with these trades, you're just looking to catch that initial reaction off of price coming back into this imbalance, the higher time frame imbalance. So if you're on a 15-minute trade, this is what I was saying about gold earlier. Let's say you caught this trade, but you look at the daily, you're like, oh shit, we're gonna go to this daily order block. I'm targeting down here. you haven't got enough structural confirmation to do anything like that. It's just not feasible. So you would look to just target the next liquidity target, which would be this fair value gap fill right there. Or you could even target the low. Now look, not a crazy risk to reward, right? If that wasn't good enough for you, you can always try to layer the 1 minute, which sometimes does work, sometimes it doesn't. In this example, you did get an entry, but I can't say I would have taken this because it's the same formula. So just like we had in the 15-minute shift in market structure displacement, for me, I want at least equilibrium premium if possible. So if we look over here, the impulsive move that actually it may have, because I didn't see that wick down there. Yeah, it went right to equilibrium. That's right. So you see how this can work. So we take the impulse move, or sorry, the impulse high to the impulse low, and look for the first area at an equilibrium. Or you can just take it at equilibrium. However you want to do it. There's different strategies. You could just taken this at equilibrium or just under it. Stop loss above the swing high. Now, what would you have targeted if you did that? If you base it off of the 15-minute, you could still target the 15-minute because you're confirming that 15-minute liquidity, or that 15-minute entry. So you can target that area. Now, if you were just using the 1 minute, like let's say this is just a 15-minute fair value gap and it wasn't confirming a higher time frame, well then you would want to just target the next area of liquidity, which would be something like these lows down here. So again, just whenever you're taking these trades off fair value gaps and liquidity targets, they work extremely well. Oftentimes you'll have little to no drawdown. They'll be quick, but you got to be reasonable. That's an example of how you could have played EOS. I don't really watch EOS, so um, there's no trade there for me. But for those of you who've been asking, it seems like it's moving pretty clearly. But if I was a buyer in EOS, I would look for price to hover around and leave a gap here. That would be nice. And then kind of consolidate, manipulate traders out, and then push the upside if you want to, push a bullish narrative. So I said EOS again. What's up, bro? So somebody said, very random, but can I check out DRV? Is that crypto? I don't see anything. Unless it's a stock, maybe. I'm assuming this is not what you're talking about. Ask me again if you're in here, ZP. So he said, "Yo, Chief, I have a question about one of the 4 trading fears. Fear of letting a win turn into a loss. How can I increase my confidence in myself as a trader and get rid of that fear? Just win more." No, not just win more, but really the only way to do that is fully accept the risk when you enter a trade. Like, so just know that when you push that button, you're in. There's nothing. No taking yourself out. There's no changing your mind. Nothing. Right? Now that's just really the only way you can do that, and it just comes from fully accepting the potential of loss. Because if you believe there's nothing wrong with taking a loss, then you won't have emotion that is correlated with the fear of taking that loss. If there's nothing wrong with taking a loss and you've accepted that, you know, well, this is just one of my many trades. I'm going to have losses, I'm going to have wins. I might take a L here. And if I do, that's a little less than I get from the market. If I don't, I make money, right? And you just don't care. That's the only way you can do that. It's by identifying the root issue, which the root issue is being afraid to take a loss. And the reason you're afraid to take a loss is because of the belief that you can't be a winning trader while taking losses. Another way you can also help is back testing. If you want a more technical solution, back test, at least data suggests that 30 trades is the best amount to back test, and it will have a similar outcome statistically to 1,000 trades. So figure out the time of day you're going to be trading, figure out the exact setup, figure out the pair you're trading or pairs, and go on Notion. Notion you can get, I think it's pretty cheap if you just, it's like $3 a month if you want just a little bit. Or you could even do it on Google Drive for free. But however you want to do it, put your data in a file, show yourself, okay, I have 30 trades. I take them between 7 and 9 a.m. There are liquidity rates set up, and I know it has an average 3R with a 58% run rate. And if you have that, it'll help you, know that even if you take a loss, that you're going to win on the end. Said, by the way, both risk management and the fears video were great and have helped a lot. Been sending them to all my mates that trade. Hell yeah, awesome. I'm glad you're enjoying it, man. Adam, yeah, let's do Adam. A bunch of people asked Adam. But
Oh,
ETF,
there we
oh,
go.
hold on. I want to ZP. I was on this, so he said as an ETF. What was this? DRV. I'm gonna finish this while I'm on it. It's real estate bear. Oh, okay. I didn't even read it. Wasn't there home data today? I could be wrong, but okay. So daily. First, this kind of stuff I want to look at a monthly chart. Okay, what the fuck? Yeah, they started this knowing the housing market was about to crash. They started it right in '09. Nah, so monthly, I mean, it's completely looks like fucking ICP, the goddamn shit coin. I mean, the monthly chart. You got a really wide range here. I'm not sure how much volume this gets, but theoretically you're underpriced here. The weekly chart has came down, has taken out an old low. Also, you have this fair value gap here. You're reacting very nicely off of. So I would look minimum for this right here. I actually like this chart. It's very clean, very cut out for you as well. Easy to tell what's going on. So I would look for maybe not this exact level, but somewhere in this fair value gap. That's your weekly draw. So daily, you're going for this high, it looks like. You could see some moves down because if you notice, we have this massive gap right here. I'm coming off of that institutional level. This also helps with, show you that there is displacement here. The theoretical, what people would look at as a swing high is something like this. To me, I would look at this as the high because price came down, pulled back, and then took the low. So you've got a break of structure with massive fucking displacement. I mean, a huge gap on the daily. But you could see some movement back down into it after you fill this. But overall, I think the draw is this. Even if you come back down here, more up. Also, everybody, again, I don't know how much volume this trades with in this market, but I don't know how big of a fund this is. But it says bear shares, so I'm not sure exactly how the mechanics of it are. I'm just calling it how I see it. What is this? They split. So yeah, that's what I'd be watching for. I don't know if you're trading this or not, but
Casper.
what's up?
What's up, brother? How you been?
Good, bro. How you doing?
Chilling, man. Chilling.
Fucking
Tell me where
gold
I
this
take
morning.
this GJ. So
Let me see. Oh, everything on yen's dumping, isn't it?
dumping, dude. UJ was nasty. It's
Yeah,
probably the
that's
cleanest sell I've had in a while. Seen in a while. I think Johnny, dude. Johnny had an entry too.
I haven't
And
been
paper
trading
handed.
them. Ah, damn.
Bad. I took a 5-minute fair value gap after we rated highs on the hourly chart. To the upside, we took some buy
Yeah,
side lick.
like
And
this into
then
the imbalance. Oh yeah, that's so fucking
yup.
clean, bro.
Yup. Dude, look at the time and price too. Literally hit
Yeah.
right at 8:30, and then the 9:30 came
Bro,
and
you want to see some
dropped.
crazy shit? Well, I'm gonna go. I went over this, but you'll appreciate this on gold. This is clean as fuck. I mean, honestly, bro, if it were me, I'd probably be.
I'm looking at the Tokyo low, like all the way,
Is this
because
Tokyo or this down
technically my
here?
week low. Yeah, that one there.
Yeah,
Technically your week low lies there.
yeah. I mean, for sure. Like, if it were me, I'd be out a good bit at.
Oh, I already am. Yeah,
Yeah,
I'm at more than half.
yeah. But gold, dude, look at gold. For those that are watching, okay, we took out that high. So if we look at gold, I talked to this yesterday. We had that push down into the daily imbalance, down into and right here, right? So we pushed down the daily
Mhm.
imbalance, perfect order block right here, like true order block. Right, we push down, we take out the liquidity, right? It would be a 3 drive on the lower time frames, and it happened right at 8:30. Displacement to the upside. Right, we got that displacement break of structure down here is what I would mark, and then that's where the fair value gap was. Took a long off this because fucking this is why I like gold. Whenever you hit it, it just fucking goes straight to your TP. But hit that
Literally.
like straight to it. But you got to take it. That's the problem. Is if you don't take it, you get fucked. But
Yep.
um, that was a clean ass trade. So look, same thing you just did on GJ. Look, so just break of I didn't even wait for a fair value gap. It was fine. That was fine enough risk for me. So it broke 1 minute. It was confirming the 15-minute fair value gap. That was confirming the daily fair value gap. And then
Beautiful, straight to the buy side.
yeah, literally it was like it delivered beautifully. And then this was similar logic, but it was a 5 minute. But then if we look, here, I'll show you this. Same thing, basically came back down under this low, break a structure up, fair value gap and discount. It was choppy as fuck though. I thought I was gonna get stopped multiple times.
When was that?
It was yesterday. I took the trade at like 2 p.m., which is my first fuck up. Well, it was like 1:30
Oh,
actually. So,
I see. Okay,
but
that
I mean,
makes
I
sense.
shouldn't say fuck up, but I was like literally like working on shit all day. Like I just checked my phone. I'm like, God damn, this trade's just like just. But
Looks
yeah, but
good. Let me along.
yeah, I was like, just chilling in it, and it ended up. I didn't even look through all of this until like it was like right here. I was like, oh hell yeah, I was playing a game. I was literally about to hop off, go to sleep. I was like playing a PC game with my boy, and then I looked at TradingView before I got off my computer. I was like, oh what the fuck. But this morning was perfect. And there, I can't say I would have taken an enter. Oh, the 5 minute was actually clean, right there.
Yeah, that was really clean. I wasn't watching XAU. Damn.
Yeah,
I
but
was
look at the
going to
time too. 8:30 a.m. when the first one was made. It was
money
8:30 a.m. It's just like, bro,
right on the
it's
dot.
so manipulated. It's fucking ridiculous. Um,
It's crazy.
Also, yeah, like Easy said, hit the likes. I never remember to say that shit. Not a true YouTuber yet, guys. But now it does help a lot. Like today, we have a bunch of people in here. If everybody likes and comments, I swear I can watch the viewer count literally just starts popping up. I wonder who my
Let's
one
go.
viewer is on Twitch. I literally Twitch is so dead for me. I have one viewer though every day. I think it's Granny. I think it is free Granny because I know he has Twitch. No, what the fuck? They just said on. Oh, I hope this is not my only viewer. Look at this guy. That's like a fucking bot. Says hello if you need real, live, high quality service to increase your viewers. It heard me.
Oh no.
I was like, I wonder who this one viewer is. But my YouTube's got like lives 26 right now, which is fairly good. Home sales today, yeah, for sure. So I said DRV airdrop. That's funny. Yeah, ask away on the questions. Also, so I said, what chat are we supposed to use? Okay, so here, let me show you guys on screen because I say this every day, and like people like I see it afterwards, where people are like, damn, like yesterday I felt bad because Oscar's like, damn, I'm a ghost to you, and I was like, no, bro, like you're just not in the right chat. It's this one right here. So you get to it, you literally click on late night crypto vibes, and you click open chat. Yeah, Cause was in it. I said, "Wow, that was gold." I was just watching it fly. But I'll go in and I'll see like should I? But it's just I can't watch and for so many different things because I'll get shit in stream chat. I'll get a crypto chat. I'll get a DM. There's like stock chat sometimes. Damn it, Oscar. But I literally, because the way I do it is I have like my I'll have like this on one screen and then I have my streaming client on the other. So that's all I see. But gold honestly might be a nice sell here. Came right in that fair value gap. Oh, it already happened. I can't say I'd have taken that though. But this is where the sell would have been. Just took the low, fair value gap entry right there. But it wasn't a premium, so I wouldn't have taken it. And really the target would have been, for me, would have been right here. Watch it just start flying. No. But I swear with gold, that's one thing I've learned. It's very satisfying to trade. Like if you want to trade like a big trade on it, you just got to really put the time and work in. But then half the time for me, it just leaves me. Like fucking the shit we were
Dude, I
watching
love
flow,
gold.
it just straight
I
left.
love gold.
But I like trading it. Like I like scalping it. Like I'm talking like in and out within
Yeah.
a session. Not even a session. Like a morning or But
Minutes. It's literally price targets, target to target, and you're good.
yeah, like
You
this
can
would have been
pretty
clean
literally
actually.
set enter and set TP and walk away.
Yeah, and that's the thing with gold. I don't even take partials. I just take it full. I
Yep.
just take it.
I
It's just
take it full every
don't
time.
ever take so that's like this is exactly why. Look, so I was saying, if I would have taken a short, this would be the low I would target. Because what would happen is you'd be in some shit. Like right now, your P&L is like it's just destroyed by that 1 minute candle.
Hmm.
But yeah, I'm not.
Yeah, she's straight continuation. If you miss it and she gets that pop and she's already broken out,
It's
then
over.
I'm literally on seconds. I'm on seconds watching the next break, next demand zone or next supply zone, whatever it is. And you just catch that and just hold. And
Yeah.
it just keeps going. It's crazy.
Somebody said when short Euro USD. I hope you didn't. Short, even that's been the last couple weeks, couple weeks, should say couple days. But this is what we talked about. This low, coming into this low, we came into it on the higher time frames, that daily, and now look at this. It's perfect little on the 1 hour, perfect. Actually, it was GU was the perfect 3 drive. I would honestly, if you ask my opinion, I like GU better than I like EU, but they're
Doing GU
similar.
tonight.
Oh yeah,
GU was nasty, dude. We're doing the whole story tonight. It was so nasty.
hell
That whole
yeah,
sell.
hell yeah. I haven't been trading, like the last time I traded GU, we traded it on here and I just got break even, but I haven't. There's been a lot of clean setups. I back test it, but honestly, dude, I've traded gold more than anything recently, which is weird because
Let's
I used to
go.
not do that. It's just
Me and Jared brought
it's
you
just
on the
quick.
dark side.
And it's
It
just
is, dude.
quick, bro. It's just so fast. Like what I like about it is like it's just it's like I don't have to fuck with it. I don't have to sit there and be in a trade all day because right now I'm working on a lot of shit. It's not trading, so I don't want to like be trading all day. Like I love trading, but I want to get my trade and like hit my goal and be done.
Yeah, it's literally Wyckoff over and over and over again. I love it. It's nasty.
Yeah, this
She's
actually.
like the toxic ex you can't get over. I always end up going back to her every time.
This doesn't look bad here, even on the 5 minute. In all honesty. But it's really against the bias for me. I'm not going to force it. I'd rather wait for just a long to come down here because I want to catch this. What is that part of accumulation? I don't trade Wyckoff. It's like the backup.
What? After
Backup.
the full breakout?
Yeah, it's like backup or LPS, whatever.
Oh yeah, backup LPS sinus strength.
Yeah.
The final reaccumulation after the breakout.
Yeah, it's just exactly a little lower time. That's the only because what I've realized recently is like I trade the fuck out of like really it's just price action. Like there's if you're actually trading the Wyckoff, it's just trading liquidity rates really.
Oh yeah, Wyckoff. It can be super retail if you try to pattern trade it for sure.
Dude, I
For
swear
sure.
that's the thing I
You'd have
tell
to
people.
peg
Like
it.
when they're like
If you try to Wyckoff too much, you'll get fucked.
like they'll
Oh
post like
yeah.
We've seen it happen like 8 times.
Live, baby.
Like live, like with funded accounts, like live. Like,
what
oh
is
my
it?
God, I
What
just
happened?
lost my funded. Oh,
Live
Flo and I
example.
have seen what's it called? Live examples of liquidation bot activated on fucking funded accounts because people marry their Wyckoff narrative and they're like, it has to do this, and then it just fucking
Like a
boner
live
candle
stream
to
or
the
some
other
shit?
side.
So you like get liquidated on a live stream?
Basically live, yeah. Like
Oh,
we're
that's
sitting
So
here
we know
trading the same
people.
thing, and
Oh, you
then
know.
boom.
Oh, okay. I thought you were talking
We
about
know a
like
few
like a
people.
live. I was like, what kind of? I was like, I want to watch that live stream. That'd be fun. There was this one dude
Bro,
that used to do
Entertainment.
TA. Like, he's actually pretty big now. He's pretty cool. He trades different. I'll shout him out. His name's Mitch Ray, TA. But I used to watch his shit whenever, just because he was funny. Like, not even for the TA at all. But like, he used to just like get hammered and like just do TA for like hours, bro. But it was hilarious. Like, he had a bunch of viewers, and it was just a funny little community. But he's just, I don't know if he does any like monetized shit, but he was funny as fuck. He's like, he trades harmonics, but I saw recently he was like, I know he was in Carney's group, because whenever I traded harmonics, I checked out Scott Carney's group. First of all, bro, that shit is such a scam. Like, it's like literally, it's a literal scam, bro. Like, I'm not even like, it says like there's all sorts of shit that's just not there. There's all sorts of fuck shit going. Like, it, because that was when I traded harmonics. It was like join market recaps of every week or whatever, and I joined, and first of all, it looks like you're like in like 1990, which I'm cool with. I kind of like stuff like that sometimes. Just, it's like trading on MetaTrader or doing a chart of MetaTrader. It's just cool, you know. But the um the group, it literally was like, said it had like live market updates and all this stuff, and like live weekly like classes, and like I joined, and like this is a long time ago. It's like 2020, and the last class I had was like 2014 or something. Like, he's had that group for. I was like, bro, what the fuck? I got my money back though. I messaged, was like, yo, I'm good, like instantly. It was like the same day. I was like, I need my money back. They actually gave it to me, so I honest at least on that part. I think it's just that he doesn't even care. Super genius
Probably what
dude
it
though.
is.
Respect for the dude. Also, Adam, I got you guys. My bad. Kind of just chilling this morning, just vibing. Um, Okay, so we came up to the highs. I think this is 4 hour equal highs. We came out and took that out. This is a while ago. I'm trying to refresh myself. Um, we wanted to take a long off of this if we got bullish structure, but it obviously did not. I think that was before. Or wait, was that before? I can't remember if that was before the equal highs or not. Because I think we were going to target the equal highs, and it may have. Let me just see something. Oh, I think it just, what it did, it just went to the equal highs without us. That's what it was. Because we were somewhere in here. What I'm gonna do, I'm just gonna X the whole chart. Every time I'm like not sure on something, I do that, so I just rebuild the story in my head. So monthly, that's crypto. I don't even know. I'm looking monthly. Honestly, the monthly doesn't look bad at all. So the only thing I really do on monthly charts is I just look for the institutional levels, right? Which are, for me, I'm just gonna look for these order blocks. So did we hit that? No, we didn't. I mean, you know, it's so close and it's crypto, where I almost want to kind of, I mean, you still have to you can't stray from the policy, but I mean, this is really your range on the monthly chart, 28 to 28 bucks to $5. That's fucking nuts. Somebody said, when looking at my charts, what do I focus on, market structure or liquidity? Because liquidity determines the direction of the market maker algorithm. Honestly, I watch liquidity more. I try to look at things like, I think that it's very important you learn market structure, because we use market structure to confirm entries and to confirm a lot of biases. But once you develop a true understanding of what's going on, I think liquidity is your best friend. That's why I saw a couple people that are like gurus. They're like, liquidity doesn't matter. I was like, what a fucking idiot. Like, why would you tell people that? But like, that's just a selling point. But it's like, if you understand, and that's also why a lot of people watch ICT and are like, fuck this. This makes no sense. It's just because they're not patient, or they don't understand it. But, and I was there at one point when I first started with the stuff. But, um, you know, whenever this is the way I like to put it. Structure helps you find the footprint of institutional involvement after it happens. If you understand liquidity, you're going to see it as it's happening. That's the way I like to explain it. So, what I
Mm,
mean by that is like, so institutional structure to me is just highs and imbalances. That's all I give a fuck about. Is where is price drawing to? That's all I care. So now I use structure to confirm that bias once price reaches my zone, but I'm not looking at the daily structure on Atom and saying, like, okay, well, here's our daily swing structure. We must go to this order block. Like, I'm not looking at it like that. Now, that could happen, and I will use that knowledge as a confluence if we get there. Obviously, look what else is there. But and we could, but I'm not gonna like. You guys get what I'm saying. I hope. I'm trying to think of explain. But to answer the question, I use liquidity more. Liquidity is now, when you say without structure is the king of all, without structure, there's gonna be liquidity. Structure is the king of all. So, like I said, you need to understand it. But like when you're looking at like developing a bias and developing your trading plan or what you think the market's doing, I think the liquidity is more important personally. But that's just me.
Yeah.
I think that's because here's the thing. Like you said, I like market makers. Um, they're not or algorithms, it's not they're not looking at the daily chart saying like, okay, bullish swing structure. They're not, just not. So what they're looking at is how do they rebalance their books in the most efficient way to line their pockets. And they do that by reading
Right.
the tape.
I
So
would say that no, I think I agree with you 100%. I would say that algorithms give you a price delivery target. Like, yes, this is what, because that is written in, and obviously just structure is going to give you the narrative for that. Like a roadmap versus a almost like a treasure chest location.
yes, I
Like
agree
your
100%.
your structure is your map, and then your liquidity is your location, pretty much your longitude, latitude. Yes, right here.
No,
Structure is telling you
100%.
how we're getting there.
That's a good way.
Yeah,
I like that.
yeah,
I like that a lot actually. That's actually I like that analogy. Analogies help people learn
yeah.
so much better too, bro.
I swear, just relate it.
Yeah, for sure. Honestly, though, I mean, dude, Adam looks good, bro. Like, in my opinion, like at this point, I mean, I'd move this equal high up to these equal highs because I think that was a 4 hour equal high over here. But now it's kind of at a decisional point, I will say, because we did just get a displacement break of structure to the downside. But if you close a daily candle like this and don't get just shot down, I would look to take all these highs. Then you're probably in it for some rough shit. But I also could look at this like the beginning of a very long three drive playing out into this monthly level. But weekly chart, the weekly chart tells me we went up there too. 'Cause there's an imbalance right there. We kind of saw this little movement down, which yes, that gave us that daily displacement break of structure, but um, I look at it like you're at a decisional point. But when I'm looking at the weekly, if I'm looking at this time frame and I'm not looking at the what time frame it is, so to speak, I'm going to tell you this down candle is just liquidating traders, and the order flow seeming at this point is still bullish. Daily chart a little more questionable because we did take out a short-term high, but we preserved these highs over here. And also, a lot of traders got short here. A lot of traders ate off shorts. I'm not saying, yes, when I say an early short, it doesn't um it doesn't mean like they're early, they're a fucking moron, they lost money. I'm not saying that. I'm just saying like that wasn't like the short to save them all or something, like that, or to end them all. It's just the early trade, the first short. So it's gonna be like the first line of traders that get taken out most of the time. That goes for any time frame. That's why when you're looking at a liquidity rate, and the reason you need this kind of structure is because you're looking at that short-term liquidation of the early entrance, and then smart money leaves that fair value gap. That's that pattern. People call it Quasimodo. People call it, there's so many different fucking, but that's all that is. The actual occurrence is just the early liquidation of traders. So that's why that's another reason why I think it's important to understand liquidity, because a lot of people get very 2 plus 2 and don't see things for what they actually are. Also, anonymous I like that. Structure helps you see the market maker's prior moves. Liquidity gives you the most exact, or gives you the exact timing of their actions. Yeah, no, it's just really like, for instance, like let's look at gold.
Yeah.
So like in this example, if you're just using structure and supply and demand, you didn't have an entry until, well, actually, you could have taken the order block entry. That you would have won the hardest. But let's just say you're looking over here, right? You said, okay, if you're using the 15-minute, and we'll just use this as an example, using the 15-minute, okay, well, here's the last down candle, and you didn't refine. I'm not saying this is how I'd trade it, but you would look for a return down to demand. And I can't even say this is the prettiest zone, but if you're using liquidity, like a liquidity raid during a session, you would say, okay, we took a low. I'm going straight into my lower time frame, and you just enter on the fair value gap. You see what I mean? So you would have got in the trade already. Your trade, there's multiple trades to been had. Now, they'll provide you with lower R a lot of the times, but they're much quicker. And a lot of the times, for me, they're more high conviction because the liquidity rate has already happened. As long as you're not just completely wrong, you're not going to get stop hunted. Now, main thing people have problems with, in my opinion, here is not taking profits the right way. So, like for instance, if I'm on a 15-minute liquidity raid, at the absolute most, you're targeting the next area of liquidity on that 15-minute chart. Now, another strategy, if you're using the 1 minute to confirm it, you can target the next 1 minute area of liquidity that's clear. And this will give you a higher win rate, a little lower risk reward. Let's just say you entered right here at the top of this fair value gap. This would have been a huge stop loss, but then you just took the trade up to the next area of liquidity on it's really the same time frame. This is the last area you moved really impulsive from, because you could say these equal highs, but obviously that wouldn't even be worth it. But
I like that. I mean, structure is not how money's made. Simply
yeah,
is
it's
like,
just like
to
the
put it as
trail.
simple as possible. Liquidity is how it's made. They
Yeah,
can't make money on structure, but yeah, that's just the narrative.
it helps
A
though. It's
tool
it's
more than
important
a
to know, because I know some people are listening. They're like, "Damn, bro, like you taught us structure," but like, no, like don't get me wrong, it's important, but it's like it's not
Oh yeah.
the holy grail.
Yeah,
So
I think you gotta pair anything with anything. I think you gotta have multiple confluences for every type of. I mean, I would say if you just tried to trade just liquidity on its own, then you would have a lot harder time
oh yeah,
without pairing anything. I mean, I feel like it goes with anything.
100%.
Indicators as well. Just one thing on its own isn't gonna do it for you.
Yeah, it's either for me. It's like either structure and supply and demand, structure. Well, sorry, liquidity, supply and demand, or structure, liquidity, and supply and demand. That's really it's those.
Yeah.
The structure is required and the liquidity is required.
Yep. Yep. Yep.
Also,
It's very
Adeliki
similar.
said thanks to Casper and Flo. So Adeliki said thank you on YouTube.
Oh. Oh, thank you, brother.
God damn, dude, there's so many scams on. So my comments are starting to just get blown up with scams on all my like. Thank you so much to Daniel Bryan Trader Forex. I'm so excited.
Oh,
I'm
bots.
financially free. What's
That's
up?
rough. I just hit my first 100 subscribers. Let's go, Casper.
There you go. Hell yeah.
We're getting up there. I'm about to get them bots too.
Next is 1,000. I'm almost to
Sir.
1,000 now. It takes a
Yes,
bit.
sir.
It's a grind, but once you get to it, it goes. Like I feel like everybody I've talked to that it does well on YouTube, they once they hit 1,000, that's when it starts like really pushing.
Just rolls.
Yeah.
I feel like it's the same. Same with trading. Once you get that big number, it just rolls.
TikTok's the hardest one for me.
That's the algorithm. Once you get that, it's over.
Yeah, it's the hardest one for me. I guess I had the least desire to do it.
Haven't they been the hardest too on like cryptocurrency and actual like trading strikes? Because I've seen a
Dude,
lot
yeah,
of
I
a lot
just
of
made a new
bans.
one. I just had to make a new one.
Really?
Yeah, I didn't have to, but it was shadow banned as fuck. Like it didn't say it was, but like I went from like 800 views and stuff like that to like 50 views. And it was
That's
because
just
I got
stupid.
like I posted that little video I made when we took the Bitcoin long, like not the last one, but the one before that, before it really pumped. And I made a video and it was like had like the profit in it or whatever. And I think that somehow that like completely fucked me because I got an account warning and it was just like dead. So I just made a new account. But they literally like shadow banned the phone and everything. So I just bought a new shitty ass iPhone and then made a new account because I'm like determined to
The
get it
whole
right.
phone?
Yeah, it's like Snap. So like in the days of the
Oh wow.
good old Snap
I
Trap
peed.
saga, they ban your it's IMEI.
Oh,
It's
okay,
like your
okay, okay.
phone's MAC address, like a computer has a MAC address, which is like the device ID, but a phone has an IMEI. So it's like,
Got you.
yeah. Well, actually, I realized this is the daily imbalance we're kind of inching up on here on gold as well. It's cool in this fair value gap. Honestly, would like to see another liquidation. I mean, it looks decent here, to be honest, but what is DXY saying? Okay. Did it take this low? What is that? It's 08, 077. Let's see what this would look like here. I'd like to get a 1 minute confirmation if possible.
USD CHF.
That's what I've been watching too. Where is it?
So right now I was gonna look at it. I folded. I'm about to look at it right now.
Yeah, I wanted some sells on this soon. I mean, it got the massive fucking, like, as with everything with the dollar, got the massive move down. I
I
think
wonder
it'll
what the
take
sentiment it is on it.
it'll probably take some time to get some power of 3 going into a redistribution schematic, if I had to guess.
USD CHF. Okay, here we go.
See what gold's doing. Because the thing about gold, I'd like a 1 minute confirmation because we're so close to this daily imbalance that it could still be drawing up into that. But we are very close to the fill, and we did come into this fair value gap on the 15-minute, and we took out a bunch of highs. So it's plausible, but I don't want to force anything, especially on a news day.
True that. It's more I would say like 65 to 70% net long on XAU.
Good.
The community USD CHF is like 75% net short.
So I don't like that. I
For the
want it. I
community
want a short.
sentiment.
I don't want it. I don't want everybody else to want a short.
Go look at that chart.
They just took out the equal highs on USD CHF.
Oh yeah. She does look nice actually. A weekly kind of looks nuts. I think I was looking to long this a while back. It's early July. Yeah, I had TA then.
See, it's gonna. If we get a confirmation entry here on the 1 minute, it'll hopefully give enough risk to reward, but we'll see. I'd like for it to form a swing high here, or I mean a low here, make a new high, and then break a structural displacement. That would be the ultimate. I guess not ultimate, but that would be ideal. Because right here, if we came down and broke structure, you're just already almost to the target.
This GJ range is gonna be the death of me.
I haven't been fucking with GJ because of that. I want it to do something. It's just so like, just like you said, just range.
Yep. Literally been weeks. Back and
Like
forth, back and forth.
literal weeks of just like nothing. I mean, there's something, but nothing like where it's like when I look
No
at
trend,
GJ,
nothing clean. It's just up and
yeah,
down.
it's just like,
Liquidity
bro,
to liquidity.
fuck. Not, and it's like not even like this to me is just generating so much because it's like whenever you pointed out those equal lows, that's what it was. But it's like this motherfucker would get this close, and then it's like no, and then it comes up here. Look, then it comes up here, and this is the like it's bouncing off this. Like I'm like, nah, fam, I can't trade that shit right now. I'm like, you can, but it's like I don't. I want like
I'm
if this gets cleared, like I get this cleared, then I start to move this way. I'm like, okay, bet I have. Then it'll
yeah,
probably just like take out a minor low or like have made a low right here. And then I'll be like,
yeah. I'm definitely more, I would say, re-accum bias, just based off of like distribution to accumulation, manipulation of highs to manipulation of lows. But obviously, structure isn't on my side, so it's
yeah,
been annoying. It's been annoying for sure.
it's interesting. I honestly for a while there I was fucking with EJ. I haven't looked at this in a little bit though, but it's
I think
starting to do the same
Senpai
shit.
and Mike was putting me on to EJ.
Yeah, EJ's chill. Like for a while there, it was very clear what we were drawing to. Like over in this range, I like that. And then right here we came out of the imbalance. So now we're kind of just, I think it's indecisive here. Came down to this imbalance, moved off it nicely, starting to generate a lot of liquidity above all these highs. But I don't know why we're moving down if we're not drawing to at least this low right there. I haven't even looked at stocks. Like what have they even done today? Okay, I did give a nice setup, honestly, but it was too late in the day for me.
Yeah, shorts are paying.
Yeah, they're nice. Very wide range though.
In each four. I'd
Yeah,
probably just wait
I
for
have a
the.
strategy with the indices. It doesn't really fail.
Never.
You just
That's
have
a
to
golden
watch
strat.
Apple
The
and
Bronx
Tesla.
never miss.
Oh god
Oh, it
damn.
doesn't, bro. Apple, Tesla, they're the heaviest weights in Nasdaq and ES.
Yeah, just you can do SMT
Go look
divergence
at the
on them.
Apple chart. Go look at the Apple chart and the Tesla chart and compare it to the S&P 500.
Do you ever do SMT divergence? Like basically, so like for instance, see if holy shit that gap. Like see if like for instance Apple and everything's making lower lows, but the benchmark asset hasn't, because that can also show that like for instance if like S&P is making a higher high, or not S&P, like Nasdaq's making a higher high, while
Mm-hmm.
Tesla and Apple are making lower lows. You could say that index futures traders are distributing their um, their share or their contracts based on the anticipated devaluation due to the
Yeah,
assets. Yeah, that's I mean it's a good strategy for sure. Like
yeah, because I also watch the flow on Tesla and Apple because I like for options because what people don't like some people don't know is that when you go long or short on an options contract, the broker has to have the shares to back that move up in case you get executed.
mhm,
So if that's how AMC happened and
yeah,
all those in GameStop, that's a short squeeze, quote unquote. People go short, the broker needs to cover, so they need to buy shares. There's no more shares left in the market, so now they have to bid higher for the shares, and then that's how the shorts get fucked. Um, so for these, the way I look at it is like, all right, if I see the charts moving down, my divergence would be I look at the option flow and the contracts. If they're going to the sell side, or like if we're moving down and they're going to the buy side, I'm a chill because we're about to get a big pop because we have, like you said, the Nasdaq and ES are trailing up. Those two stocks are coming down, but the options flow is going up. So that's my divergence right there. I'm like, oh fuck, I can't touch this, because there's no direction. But if everything's pointing in the same direction, it's like like right now, I'm about to catch a lot of pips on ES because Apple just broke the short level to the downside, so it broke 167.08. So we should pull back just a little bit here and then continue to the downside. And then Tesla just needs to break 880, which is like $2-3 away. And the S&P and Nasdaq should slip from there because you'll
Yeah.
have Boeing slip, Nvidia slip, AMD slip, so all of FANG slip, and then yeah, they run the market.
Yeah, for sure. I mean, because like at the end of the day, the contracts that get traded on ES, it's a lot of floor traders. So if they are paying attention to all that, but and also
Yeah.
manipulating a lot of it. But that's the SMT divergence. It's like because people always think you can only do it with like DXY and currencies, but you can do it with any benchmark asset. Like
Hmm.
you can do it, like I was just saying, we do it with fucking interest rates. You can do it with
Yep.
everything, like
Oh yeah, I
literally.
used to use interest rates. They're not popping right now. They're not hitting, and DXY is not hitting with the market either. Like we haven't really been
You don't think?
seeing
I feel
like.
like DXY is like on point. Not with stocks, I guess maybe, but like in general, like I feel like it's on point with it. Well, not like lower time frames, but like the daily. Like I feel like because if we look like what was this like 810, and then that's when it started flying, and then it was 810. Like this is where you got that divergence, and it was like fucking
Mhm.
that shit. But like I see, it's not moving in correlation, but that tells me right there that this was fucking getting distributed like a motherfucker. S&P. Like
Yeah, I
oh,
went short right there. At that level, I was expecting it to pull back. We were looking at that level. That was such a sweet level.
the
Right now,
highs,
though,
yeah.
I feel like we could push up to once we come down and clear some liquidity, we could possibly push up to 449 on the S&P. It would be perfect to clear early shorters
Yeah, that'd be
if we
nice.
pull because it still correlates with ICT. If you go to like the weekly, you'll see that there's this big ass inefficiency in a wick that needs to be mitigated. I mean, it doesn't have to be mitigated right now, but if I see signs of bullishness, I'll probably go
Yeah.
buy some options contracts for that level
Yeah,
because
because
it's pretty sweet.
the weekly on like you said, like if we go down into like SPX, like down into these like 4078, like
Hmm.
4013, like that area, there's a lot of shit in there that I could see a at least if not even a move like that high, at least like a bounce, like depending on how we close this candle and the next candle after it, like there's gonna be a massive imbalance. If we don't leave an imbalance, then yeah, it looks like it's gonna go for the highs.
Yeah, like right now, if you check Tesla, here I'll show you my chart. Like Tesla, Apple, and all these people are moving in correlation right now. So like what I see usually is Tesla will move down and Apple will move down first, and then you'll get ES and Q. I was waiting for these higher levels, but I just market sold because Apple and Tesla started breaking. But you can see right there that they're pulling back heavy. You see ES and Q. ES broke structure to the downside, and Q is about to do it. But Apple and Tesla are more heavily weighted in the S&P 500,
Oh hell yeah,
so
that is like
that's why
that's like the entire S&P 500. Not
it
really, but
is.
it's like a lot of it though, isn't it? It's like some crazy
Yeah,
percentage.
it's like 30% or
Yeah,
something combined, or 40%. So it's
that
like
shit's
crazy.
crazy.
And if I'm trading oil, I trade against Aramco, which is worth the entire Nasdaq and the S&P combined.
Somebody said up 4K on gold. Fuck yeah, he took it. I guess he just said fuck it. Hell yeah, I'm happy, man. That's what's up. Yeah, see, on the 1 minute, like for me, I didn't really see much. The only displacement I saw was right there, and it wasn't in a what's it called? A premium. So Not enough for me to want to take a sell just because of the news day and the imbalance is kind of lurking above. So I'm kind of just hanging out. But I'm glad you made some money off that. Who is who? Oh shit, I just realized what time it is. I gotta hop off here, guys. I got some other stuff I need to get done. I always do that in the days that I need to do shit. I sit on stream. But I appreciate the fuck out of all you guys. Discord was popping today too. Everybody was in here. I like it when people come in here and chill because it's like it's kind of not me just talking to myself. But no, I appreciate the hell out of everybody. Again, if you're watching this and it did help, please like it, subscribe to me, comment, whatever. I appreciate it if you do. It's fine if you don't. And I will see you guys tomorrow. Peace.